Accelerators. Hi everyone, I hope you're all doing well. This is Hira Irshad, CEO Apris Technologies. And today we have Mr. Marcello Diaz Bowen with us, who has been on all sides of the entrepreneurship ecosystem. He's a successful entrepreneur, a successful investor, has run many VC firms as well. So today we will learn from him what good startups are and what are investable startups. So, hi, Mr. Marcelo, how are you?
Hi, Hira. Good morning for me. Good afternoon for you.
Yes, good evening for me.
Yes.
Mr. Marcelo, I would love for you to please introduce yourself and tell us a little more about what you have done in the entrepreneurship ecosystem.
No, thank you. So, just to be, just to clarify, I live in Chile, in South America. So that's why we have this time zone difference. So the thing is, it's funny when people call me a successful entrepreneur or successful investor, because that might be the picture today. I have no idea what's going to happen tomorrow. The world is completely crazy. It's like a roller coaster. You go up and down all the time. So I failed before in my life as an entrepreneur and as a venture capital or an investor. I lost a lot of money, but when you add all the failures and positive things, the sign is positive. So so that's the good part right now. I created myself 11 companies with fantastic and not so good partners. So that's part of the learning that you have to create in time, how to build up good partnerships and team in order to create your startups. I had the luck of running the largest incubator in the country from the Catholic University a long time ago. Then I was the head of the incubator management of it was the Chilean incubator program in the country. Worked with the government in order to create many successful initiatives that right now are still running. I'm a judge and mentor of Startup Chile, which is the largest incubator in South America, in which we invest in order to bring entrepreneurs to Chile, equity free. So you can learn about our country, like $100,000, so you can stay here at least 6 months. And then I created a venture capital firm in Palestine, since my roots are from there. My great grandfather came from Bethlehem, so a small town called Bet Sahur, which is very close to Bethlehem, in which we invested in 25 startups right now so far. After that, created a venture capital firm in Chile with Telefonica Ventures, and then came back to create my own company in 2017. Sold it last year, and now I'm running a couple of business incubator in the south of the country, and creating my third fund. I've been bringing startups from South America to Silicon Valley for almost 10 years. Had the luck of investing in more than 250 startups, myself as an angel investor, incubator, or venture capital. Being involved with fantastic people who are trying to change the world in a good way, giving and supporting young entrepreneurs to create their own companies. And now is the second time I talk with the team of CMX Connect Peshawar, and I'm really happy to be here today, and love to help whatever I can do to share my knowledge and experience in order to support your ecosystem and environment in Pakistan.
Absolutely. I would also love to mention CMX and Pakistan Tech Summit for giving us this opportunity and for specially bringing you on board to share your experience. I see you
Thank you.
have almost a 360-degree experience of the startup ecosystem. You've run incubators, accelerators. You have invested in more than 250 startups, which is great.
Mhm.
It means that you know by heart what kind of startups work, what kind of teams work. So, Mr. Marcelo, could you just elaborate a little bit about the 250 different teams that you've invested in and worked with?
Mhm. Great. So almost 130 were very early stage companies
Mhm.
in the stage of an idea with a minimal viable product, trying to figure out what is the best market fit in order to launch their solutions, their products or services. Most of them have been in the software industry, but myself, I'm an agriculture engineer, so I really love biotech technologies. One of my exits it's in biotech myself as one of my companies. I've been investing in medical devices. I mean, I always say that I have an ocean of knowledge of I don't know 5 inches deep. I, I I've been working in so many and investing in so many different ideas and good like moving startups that are already making good revenue. That it's all about the team. It's all about the momentum, the technology. So I always said that if you're a good salesman, it doesn't matter what you sell. It's all about knowing the jargon, the language, to understand the business per se, so you can learn from it and start moving ahead with that technology.
Absolutely. Since you talked a little bit about health tech and the startups which were making medical devices that you've invested in, and since I run a health tech company myself, we've started a company where we make medical devices. I would really love to know a little more about those startups and what kind of devices are they making.
Sure. So the best company that I can talk about is Levita Magnetics. It's run by an engineer, but I'm sorry, it's run by a surgeon, a medical, whose
Oh,
father is an engineer. So they mix together the how can we solve this problem from the medical point of view as an engineer point of view. They created a device, and then we protect it with intellectual property and patents in the United States and all over the world through PCT in order to start doing the medical test in Harvard and Stanford. And to be honest, right now is open. There is a lot of people using the devices. It's a system that allows you to take the basal from the belly button instead of doing so many cuts in your belly, and it's fantastic. Really, I'm really happy for the whole team. It's been, I don't know, 8 years of work. Medical devices take in biotech
a lot of
takes
time.
a lot of years in order to be successful.
Absolutely.
But
Absolutely.
as an investor, you know exactly how long it's going to take. So you need to find the investors to back that kind of investment first. People who are willing to wait 12 years in order to have a successful exit. And as a medical devices, that in most of the startup and ecosystem, for every 10 investments you do, there's only one who will really pay the party, we say. Um, in our business, failure is part of our business, and it's okay. I mean, we're not afraid of it. From every 10 investments, there's usually three or four who are not going anywhere, sadly, um, who usually will not succeed in time. There's two or three, we call it zombies. They're doing
Yeah.
good enough to survive, but not good enough to be sold. And then you have the others who are successful and usually pay for the others and make it a success venture capital. Um, And here I might add that it's very different to invest as an angel investor, to invest
Mm-hmm.
as a business incubator, and to invest as a venture capital firm. Completely different focus. When you invest as an angel investor, you invest, I usually do 5 investments. I look forward to get 500% of the money that I invested in 5 years. So we call it 555, right?
Okay. Perfect.
When you do invest as a business incubator, you
Mhm.
have to wait at least 10, 15 years before having a good exit, unless a VC will buy your shares out in the next 3, 4 years, which is
Absolutely.
weird. When you go for as a business incubator, you need a lot of you need to be very patient. This is something that takes years. But as a business incubator, you're changing your country. So that's why we work with universities or privates who are willing to sacrifice themselves for 20 years in order to see a difference in the country that you're working with. Um, we usually invested, just to give you an idea, in the software industry, 120,000 dollars in the idea stage, in order
Okay.
to pivot a couple of or 3, 4 times, in order to have something working in the market to make it grow with the next venture capital firms. And then, as a venture capital,
Yeah.
you have 10, 12 years since you in order to invest in startups, make them grow, and then share your shares. I mean, sell your shares. The business of a venture capital firm is to invest in companies, to make them grow as soon as possible, as big as possible, and then in a period of 6 to 7 years, sell your shares for at least 10 times what the money you invested. That's our business. It's not about profits. It's not about dividends. It's about making you grow. That's the reason.
All
And in the VC industry, you have early stage venture capital firms who will invest, I don't know, $500,000, $1 million, and then you have and then do follow-ons around 5 million per company.
yeah.
And then you have medium, I mean, in growth stage, they will invest, I don't know, $5 to $10 million per round, in even 30 millions per company, in order to make you grow. And what usually happens is you co-invest with other VCs who are bigger than you. And in 2, 3 rounds more, you even go for an IPO or sell
Yeah.
your shares to the next investor or the company who will buy your company out.
Absolutely. So since you're talking about investments and different kind of investments from the perspective of an investor, what kind of equity is an angel investor looking for? What kind of equity is a business incubator looking for? About business incubators, we know they usually keep 5 to 7% in Pakistan. Or what kind of equity is a VC firm looking for? And uh, once you answer this, then we link it to startups. So, that's what I'm looking for right now.
Sure. Let's not talk about uh, convertible notes or keys or safe, whatever you want to call it. Let's talk about equity. In terms of equity, what we usually do as an angel investor is we don't invest alone, right? So we usually hang together about 5 to 10 friends, and then we invest, I don't know, $250,000 or something like that after the incubator, and you're
Yeah.
aiming for 10%. Truly, I mean, what is really important for an angel investor is that the owners of the company, the entrepreneurs, still being the owner of the company up to the second investment from a VC fund,
Yeah.
right? Not
Yeah.
you are an employee of the VC, and then entrepreneurs will leave the company. What usually happens is, I mean, being an entrepreneur is really, really hard. When people tell you, no, go create your own startup, it's amazing, you're gonna have fun. Forget it. It's terrible. You're gonna have 5 years of the worst experience of your life. I mean,
That is so true.
you're not gonna get a salary. You're gonna be fighting with your clients. I mean, it's really. I mean, you need to pay the salaries of other people first. It's really really hard. So
I know, I can understand. I'm going through the grind right now.
it's really hard. So you need to think yourself, you're gonna have 5 to 7 years of hell, right? So
Absolutely.
so at least you have to be the owner of your company, right? Because if at some point in the board of directors you have only one vote out of
Yeah.
five and you're not directing anything, you lost it. And most of those entrepreneurs, I don't know, somebody's going to offer them a great salary and they're going to leave. And as an investor, what you want is the entrepreneurs to keep fighting for something that they really like, and to be, I mean, the largest shareholders in the company, at least up until like the third investment. Um, as an angel investor, you go for that number. Incubators usually shouldn't go for more than 7%, in my humble opinion.
Absolutely.
5 to 7 is a good number. I even invested for 3% when the companies were a lot bigger.
Yeah.
Business incubators should help you not just with the money; they should help you with uh, the best marketing they have. I mean, startups don't have budget for marketing, but the incubators they have. So they should put you on TV. They should put you on the
Mhm.
press. They should help you grow your acknowledgement in the market. They should help you with the best network they can have in order
Yeah.
to increase the chances that you've been successful. A lot of experience and knowledge from the people who work in the incubator, and the budget and the capital. That's the four, I don't know, um, part of the table that I would say that incubators should help you. And that shouldn't be more than 7% unless they're investing money, and then it's part of a round. And BCs, 20, 25%, no more than that. Per round. I mean, usually what happens is that, I mean, a venture capital firm, it should be always they shouldn't be getting more than 50% of the company. When you're talking about private equity, some family offices or big investors will like to have 51% from day one and run
Yeah.
the whole company.
Yeah, absolutely.
But a venture capital firm shouldn't get more than 30, never, ever. My experience, the best numbers are 20, 25.
I think that's what's been happening in the ecosystem over here. I think angel investors and VC firms have been keeping a lot more than the equity share that you talked about.
It's very
And
usual. It's very
yeah,
usual at the beginning when the market is not developed and people don't know much about this business.
yeah,
South America was exactly the same in 2005. People will go and say, "Listen, it's my name. Everybody knows me. Give me 50% of the company," and not even giving you money. It was crazy. Yeah. And the other thing they created was this crazy idea of, okay, I'll have the 100% of the company. I
yeah,
will give you, $1 million, whatever, $100,000, doesn't matter. 100% of the company is mine. And if you hit the milestones that you offered me, I'm gonna giving you back 10%, 20%, up until
investing what the shit is. Yes, it's very common in Pakistan now. And honestly, it hurts investors more than it hurts founders.
yes,
It hurts founders as well.
you're
Because
killing the
founders
startup from the beginning.
yeah, they don't want to do it anymore, and then investors lose the money that they've put in because the founders don't have any interest anymore.
And
Absolutely.
let me tell you something about that too. These anti-dilution clauses that sometimes people use. Okay, so I'll give you the money, but you cannot dilute my investment. I will always have 10% of your company. That will kill the startup too. And the other thing that happens is that if the startup is successful, and
Yep.
then you go for investment abroad in
Yep.
Silicon Valley, in Chile, in Brazil, in I don't know, in somewhere else in Pakistan. Nobody will give you money if they see those terms in the cap table. How can I will give you my money for
Yep.
20% of the company if somebody who gave you, I don't know, $200,000 will have 50% of what I'm investing?
Absolutely.
forever, forever. I will never
Absolutely.
invest in a company like that. So that kind of angel investors or VCs are not angels, are vampires, and will kill your company. Do not accept that. And but that's a
Anyway, it's a
responsibility
very
from the
ironic
entrepreneurs.
name to use for an investor. Angel is a very ironic name to use for
Yes,
investing.
yes, yes. I wouldn't consider myself an angel. But anyway, so the thing is, here is very important that investors learn about it, because you are killing the companies from day one. And if the entrepreneur sometime get bored of this and left the company, what are you going to do with the startup? They were supposed to be the heart and the passion behind it. You need to keep your entrepreneurs happy.
Absolutely. We've seen many great startups take off, and because of such investment arrangements, the founders have left the company and the companies have then closed down. So it went
Of
nowhere
course.
because obviously somebody from the outside cannot run that idea and that business. uh, what are the things that go wrong from the side of startups, though? When do they have some unrealistic, expectations from the investor as well? Plus, I would like you to elaborate a little more. So, for example, how important is it for an angel investor to be from the same sector or to have some prior knowledge in the technology that a startup is developing? And the same goes for VC funds.
Good. So it's like if I want to create my startup and then I go ask money from my grandfather or my grandmother, and they have no idea what are we doing, and they're gonna be asking me for their money back every Sunday, right? So you need somebody, as an entrepreneur, is your responsibility to find an investor who understands your business and to help you, not just with money. It has to be smart capital, smart money.
Yeah.
Because if not, it's like going to the bank and ask for a loan. I know that most of the startups, the bank will never give you the loan. So that's why you look for
Absolutely.
investment, right? but but you need to be as good as a founder in order to find the best investor for your company. Do not just accept the first check. If you do it, it's your responsibility. Do not complain later because it was your fault. So whenever you're looking for an investor, always look for the companies they invested before, call their CEOs and ask for their experience with these investors. That is very important. Very, very important. And nobody do it. It's like, yes, I got my $1 million, but the guy's a prick and he's gonna be bombarding me all the board of directors and asking for their money back and asking for why I'm not hitting the milestones. Come on, we're in the middle of a crisis. What are you expecting? I mean,
Yeah.
whenever you create a startup, things will go wrong. Always, always.
Always.
it's
Absolutely.
it's not
Always.
like everything is gonna, this business plan I created that I can, I don't know, use for my chimney right now. I mean, things will change. Your team has to be good enough to change, and your board of directors, your investor, they have to be part of this change. They have to be like, okay, we don't like it, it's okay, but you guys are good, let's change the business model, let's change this part of the technology. Okay, we filed an a patent, but the patent is not gonna, be good enough because we need to change the technology now. It's part of the experience that the investors have to be your mentors too. One of the things that happens, most of the countries that I've been investing in everywhere, is that the entrepreneurs are fantastic entrepreneurs per se. Like, they know the technology, they're really good, they're geeks. I mean, how can I tell them to change the things inside the technology? But they have no idea of how to run a company. It's
That
they
is
don't
the
know
most
how to
common
they
story
don't know how
everywhere.
to hire people. They don't know how
Yeah.
to fire people. They don't know.
Yeah.
I mean, one thing is to run a company of 3 people, 5 people. Another thing is to run a company of 150 collaborators. It's completely different. It's another company. So you need to put the, we call it the long pants, not just the shorts. You need to create a corporate advisor. I mean, you need to create a government as a board of directors, something that helps you to run the company, and not just you with your friends anymore. This is like senior, experienced people who will help you take the best decisions, even when you have problems with your co-founders,
Yeah.
because that will happen too,
That
right?
happens almost in every startup.
All the time, all the time. One
Yes,
of the biggest problems I've seen always in every startup in the world is that they don't talk about cap table up until they got the money, right? And they, let's do this from the university, 50-50, no problem. But then the other guy left. And then you have 50% of your company with somebody who is not even in the company. I mean, there's so many issues you see, and it's worldwide problems, and it's always the same. That good incubators will help you solve those issues from the beginning. So this
yeah,
giant building that you're creating uh, have a good basement, right? Angel investors should do that too. They will help you. They need to help you to, because I mean, come on. If I invested in 200 startups, you know what are the typical issues that you see in every company, and it doesn't matter if you change the name of the gender of the entrepreneur. These things will happen at some point. At some point, right?
what are the most common problems that you have encountered on human level, per
Yeah.
se, as you mentioned, the issues between co-founders? Yes, that is very common. But what are some of the other issues that entrepreneurs don't understand because the incubators have given them a lot of undue hype as well sometimes? So,
Hmm. Yeah.
and they aren't in the business world, so their expectations are so unreal.
It's funny, but depends on the country or the culture or the religion. People are different. In South America, I like South America as an example because if you invest in Chilean entrepreneurs, they're very geeks, right?
Yeah.
They're very into their technologies and they love their technologies as a baby. And when you tell somebody that their baby is ugly, they don't like it, right? And the thing is, when you take this baby to the market and the market don't like it, it's like they're telling them like their babies are ugly. So you need to be fixing with Chilean entrepreneurs an open mind, that you need to go to the market as soon as possible in order to change this baby so it fits perfectly and to be good to sell. When you invest in a Brazilian or Argentinian entrepreneur, these
Mhm.
guys are salespeople.
Yeah.
Salespeople. They will sell whatever. They will sell you a rock. But sometimes the technology is not as good as they told it was. So you need to fill the gap very fast, or your market will kick you in the butt back. It's like,
Yeah.
okay, you sold me this, but it wasn't as good as you're telling me. And then you have
Yeah.
the Chilean guys who are telling you, uh, I'm not sure about going into a market yet because it's not perfect. So, and perfect is the opposite. It's good. Yeah, I mean, you need to go as soon as the MVP is ready. And then in Palestine, people sometimes is very shy, right? And they have a fantastic technology, is running, but they don't know how to communicate. And this is something that I've been seeing in many countries too. I don't know about Pakistan, but the other thing are gender and religious the differences that makes that fantastic female entrepreneurs are not able to present their companies because of different cultural issues, and I don't like it. I mean, when you look as an investor, you don't care if it's a boy or a girl. You just see the team as a quality, and then you see the startup per se, and then you see how it will react in the market.
Yeah.
Of course, I love to invest in fact, in the MENA region, most of the startups we have invested are female startups. I love to invest in female-based companies. And this is something that at some point countries will have to understand, that it doesn't matter the gender. But then, so I cannot say that there is the typical, but ego is one of the biggest issues everywhere. Everywhere. It's like It's like, this is my company, this is my intellectual property. The patent is filed at my name, not the company's name. The royalties should be paid to myself. You are not working as hard as I am, so why do we have 50-50? I mean, this is the typical issues when you start creating the employee stock option plan. Investors will ask you to have the ESOP done before we invest, or you're going to be diluting my investment. And then the entrepreneurs start like arguing between each other. Okay, should have more ESOP from your side or the other. I mean, these things are very common at the beginning, the first, let's say, 3 to 5 years of an ecosystem development. But later on, your entrepreneurs would have failed 3-4 times before even approaching you as an investor, and they will know this like by experience, because I can tell the entrepreneurs you're going to have all these problems, but they won't listen. They don't even read the terms of an investment before clicking. They just want the $1 million. It's like but later on they will understand that the term sheet is really important. They will
Yeah.
understand that to understand who is investing in your company and sitting on your board is really, really important. And these lessons, they have to learn it by themselves.
Absolutely. Everything you talked about was so relatable because in Pakistan, also in the northern region, Peshawar, people are geeks. They want their technology to be perfect. Towards Lahore and Karachi, they can sell you anything. They're really good salespeople. So all of this is so relevant. And I think issues between co-founders, it's like it's a fact. It's an eternal truth. It happens and it always will happen.
Let,
Um,
let me let me give you one tip though. Most of the investments that have been successful, that we know, the entrepreneurs, the company took 7 years to have a good exit. 7 years. The entrepreneurs average, the founding team were 2-3 people,
yeah.
and most of the entrepreneurs when they do the exit are 37 years old. So these numbers are changing every day, especially now that younger people is getting involved in startups, because it's
Absolutely.
cheaper and faster to create a company, right? Which is
Yeah.
fantastic, but it takes a lot of time. So do not think you're going to sell your company in 3 years. That's never going to happen. Oh, yes, maybe, but you're going to be one in a million. Okay, there's 200 million people in Pakistan. Maybe will be
This is
faster than a 17 million people country like Chile. But things that will happen is that, for example, our country is very small. So whenever we create a startup, we're thinking globally. In countries like Pakistan or Brazil or United States, when you have 200, 350 million people, you usually think in your local market first. But then when you start thinking in local markets, I don't know about Pakistan. I'm very, and I'm sorry, I'm very ignorant about your country, but it's not the same to create a startup for Pakistan than to create it for your city. That maybe
absolutely.
your city is bigger than my country, and then to create for universities of Pakistan, or for certain niche of clients in your city. So go for the niche first, grab them, make them your evangelist, we call them, people who love your startup and start telling everybody about yourself, and then
Yeah.
start moving forward into other niches or other cities or other countries. Um, Here we cannot do that. I mean, come on, there's only 5 million people in my capital.
Yeah.
There's not enough people to buy from our startups. So we go abroad faster, but that is more expensive too.
That is. So how important do you think is your outer environment or the market that you're operating in? Does that matter in making a startup successful?
Uh, I would say the flexibility and speed of going into a larger market is more important than if you're going global or not. I mean, if your local market is good enough to grow fast, do it. But then, if you're ambitious enough, you're not going to be having your startup in Urdu only. It has to be in
Absolutely.
English. It has to be in Spanish. It has to be in Chinese. I mean, you have to make it grow as fast as possible, and your investors will push you to that. I wouldn't invest in a company for 5 or 10 million clients only. Most of the VCs will want you to have $100 million in revenues per month. So that's where you have to go, right?
So what kind of, tech sectors do you think are going to be where startups will flourish a lot? What kind of tech sectors are very close to your heart that you think have a lot of space right now?
I love software as a service. I love it, and I do because um, it's not a sector per se. It's a business model. But I
Yeah,
love the fact that startups are fixing issues and problems for customers like myself or yourself, and making their life easier,
yeah.
making something faster, cheaper, or more efficient. I think that is something that is helping everybody. Logistics are going to be very important. Just look at Uber, Kareem, in your country, maybe. I
We are
mean,
startups of
come
our
on.
own.
So
Yeah,
if I can have my phone is a computer. It's been a computer for the last 5 years. So if I can buy my groceries and have them in less than an hour in my house
yeah.
without going into the supermarket, and come on, it's fantastic. So we got almost an exit right now, our first unicorn in the country, which are being sold to Uber. What they do that? I mean, you buy your groceries and they will be in your house in an hour, and it's really amazing. When you go to a supermarket in the morning, there's no more people. There's only people working for this company now. So you need to buy your groceries, or and compete with these guys with their T-shirt, or you need to just go with the app, and it will be the same price as the supermarket. The same. It's the same. Exactly the same.
So we
Um,
always hear
Logistics
about
in terms. Hmm?
sorry, we always hear about exits in software companies or software startups, but what is the exit scenario in companies who are operating in medical health tech or hardware devices and all of that?
Usually don't hear about them because people don't know about them. If your company goes well, the people who will know about the Aprus, I understand is the name of the company, will
Yes.
be the investors,
Yeah.
the entrepreneurs, and their families, right?
Right.
But if a company is sold to Uber, everybody will know about it, or to Amazon, because they were serving customers, right? So
Yes.
so your technology name, and the patent that you filed is in your machines and in your medicals per se. So it will be very well known by the universities of your country and people who are interacting with the intellectual property. So, but I always ask my entrepreneurs from the beginning: do you want to be rich or do you want to be king? And most of the medical devices entrepreneurs who founded these kind of companies, they want to be kings. They want to
Hmm.
create a better world by helping others through medical systems, and they're very very into the quality of the technologies they created, right? Um, in the software industry, you have some kings, but most of the guys, they want to be millionaires. So it's a different approach. Um, but anyway, companies like Johnson and Johnson, I mean, they're huge companies in the United States who are buying medical devices. All you have to do is look for certain magazines who will be telling you what are the last exits, and it's really important for you as a founder of these kind of technologies to know about this, because it's the kind of exit that you're going to be promising your investors. So whenever you are inviting an investor to be part of your company, you need to be showing that this company who did something similar that we're doing, and
Yeah.
even if we have different innovation because of the patents, was sold at this number and was bought by this company. So whenever you do in your pitch, you need to have that exit strategy in your presentation.
Thank you for elaborating on that. I think we have a question where people want to know that since we cannot ignore the COVID situation, people want to know how investors are behaving during this time where we are dealing with the pandemic. Are they still investing? Have they stopped? What will the market look like? So we just like to pick your brain a little on that.
So it's been a hard time, to be honest, to run a venture capital firm because when you run a VC, you have investors who committed to send you their money whenever you are going to invest in a startup. VCs works this way. It's not like, let's say I have I don't know, $30 million venture capital firm. It's not like I have $30 million in my bank account. What I have is commitments from investors that whenever I'm going to invest in a startup, they will send me their 1%, 10% commitment they created for this VC, right? So let's say I have a $1 million investment. I call Mr. John Smith, and he said, you know what? Because of the COVID, I don't have the money.
Yeah.
So because I lost my company, the one who was giving me profits enough to send you the money to the VC. So there's a lot of venture capital firms right now having having big problems. On the other way, the VCs that have money, like ourselves, and don't have problems with their LPs, limited partners, we're not having issues to invest. In fact, what's happening is like the COVID issue accelerated most of our startups' hypothesis. So myself, we invested in a company who is doing deliveries. Mm-hmm. We couldn't be making more money right now. It's crazy. We increased our sales in 500% in 2 months. Right?
Digital companies, I think, are benefiting from the situation.
There are many companies who are benefiting from this, and most of them are companies who were selling online, most of them, or doing logistics or in the industry. So in our experience, what's happening is like 1/3 of the companies are doing incredible, 1/3 are not being affected so far, and 1/3 of my portfolio is having a really hard time. And we're working with them and how to keep the cash flowing and our investment as the burn rate as low as possible, as long as we're able to survive this crisis to be ready for as soon as the lockdowns are over. So it's not like we don't care. It's like investors right now are looking for other industries who are hottest, but we still have the money to invest.
Absolutely. So I have a question from one of the successful founders in Pakistan, Mr. Shayan Suhail Server. I'm just going to read it out so it stays the way it is. He's asking that looking at the current geopolitical situation, US and EU government policies seem anti-China. Do you think the manufacturing industry would shift? How do startup investors look at manufacturing? Also, do you think that manufacturing in this current scenario should also include real estate in its assets or not?
Oh, there's a lot of questions right there. Yes. I come from a small country. We usually don't manufacture our technologies per se. What our engineers will do is create the technology. They will do the innovative part, and they will send the manufacturers to be done all over the world. So if you ask me as a Chilean entrepreneur, as an IP driven country, I don't care if the manufacture is done in China, in Brazil, or United States, as long as the price of the product is good enough to be in the market and the customers are willing to pay for it with a nice profit. So if this is going to shift or not, as an entrepreneur, you need to be looking for other manufacturers. Now, if the question is, if you are the manufacturer of that technology,
Yeah.
will that affect you? It might. But I don't know. I'm really sorry. I don't know how important is China or United States for Pakistan manufacturers. So I don't know if Chinese are paying Pakistanis to build their technologies, if Pakistanis are sending their technologies to be manufactured in China or United States. Most of my experience, I had the luck of studied in Harvard and Stanford, and some of my teachers were manufacturers in the United States, and they had to move their companies to China because it
Yeah.
was impossible for them to compete. But as an entrepreneur, you need to be flexible and fast, and you need to think 6 months in ahead. If this is going to affect your company, I cannot tell you because I don't know the details. But the most important part for me is like the IP, the heart, like the core of the technology needs to belongs to you. You need to be the one assembling. You need to be the one. It doesn't matter if your office is in China or United States, but you are the one who cannot let others to look into your device, into your technology, and do the reverse engineer to learn how to copy it. It doesn't matter if you have patents. People will copy your stuff all the time.
Exactly.
And
So it brings me to another question.
I'm sorry,
Why
I'm
do
sorry,
you
but
think IP?
sorry here, but there was this question about the real estate in assets,
Yes, that should.
right?
So
Hmm.
the question was related to manufacturing, that if startups should then, include real estate into their assets or invest in real estate.
I had never done it. I had never done it. I don't know if I will in the future, but I don't care where the office is. I don't care if the company belongs to me. It all depends. It all depends in how important in my profit is, if the building or the machines are mine or not. When you have a vertical development, right, or manufacturing system, yes, it's better at the end to own your own technology, to machines, and hire your people in order to have better profits. But at the beginning, I pay third parties. So it's a big question, and all will depend in your technology.
Absolutely. Also, I just wanted to ask you that, if IPs are not that important, because people now have reversed engineered a lot of technologies, and a lot technology usually is not a secret anymore. So is it more important to have a very strong IP, or is it more important to develop your business and have a good market penetration? Because, for example, if somebody copied my IP, I'll go to the court and fight the case. How much can an IP protect you?
Okay, so IP is a big word, intellectual property, because it could be a secret, it could be your secret formula, or it could be patented, or it could be filed in a notary as the I wrote this song, right?
Yeah,
So it all depends. In this world where technology is changing in a daily basis, usually I love more to keep the secret than to file a patent. But in medical devices, in
yeah,
hardware technology, you need a patent uh, for sure, for sure. Because and remember, the patents won't protect you in the country that you are manufacturing, but will protect you in the country that you are selling your technology, right? This is a typical
absolutely.
mistake. People think I will
Yeah,
protect it in Pakistan because I will sell it in the United States. I don't want somebody from Pakistan to copy it.
yeah,
No, you need to protect it in United States because you will be selling your technology there. So depends on the kind of technology that you're working here, is what kind of intellectual property strategy you need to have. For hardware, I will patent always. Design or invention, always.
yeah.
For medical devices too. For software, I'm not sure. To be honest, I haven't done it. We always have the code, we call it. We have it stored in a GitHub with secrecy, NDA for all the employees. And whenever we have a patent or intellectual property problems with some of our clients or our competition, what happens is you go to court and the judges said, listen, I don't know how to solve this issue.
Yeah,
you,
absolutely.
you will spend a lot of money in lawyers for the judges to say, especially in countries who are starting to work in these kind of processes, they're going to say, we're not able to solve this issue.
Because entrepreneurship is usually ahead of the law. So,
Of course,
law comes later and processes come later. So, yeah. IPs, however, the ones you've been talking about and hardware, products, and especially Harvard IPs are pretty expensive. Startups who have developed a product, and obviously they are lean startups, how do investors expect them to have IPs that would cost almost a fortune
okay, so
before an investment? It's almost impossible.
if you file a PCT, will cost you $1,000, no more than that. It's
Which will
very
be
cheap.
I
Then
think.
you will have 31 months of
Yeah.
protection, right?
Okay.
In that 31 months, so whenever you file the patent, it's because you are absolutely sure that your product has a market fit. See, you already tested and saw that it works. Do not do it before, right? As soon as you file the patent, you have 31 months to raise the capital to protect the patents in the countries that you really want to sell your technology. And so that's why I usually do file the patents when I already have the investor who wants to support me, not before. Because if not, you will have a gun in the table or a clock with a bomb who is going to explode in 31 months, right? So you better have your investors before you do that. And so part of your capital raise has to have that special part of $350,000, $500,000 for Europe, $350,000 for United States, and so on. I mean, you have to explain to your investors, we want to sell our technology in these countries. It will take us 8 years to be in the market. In order to do it, we need to file the patents. So from the 20 years of the patent, we already lost 5 or 8 at the beginning of the process, but it will be worth it.
Thank you.
For MVPs in software or mobile applications, the patent doesn't matter. What's really matters is your traction. Is how many people use your technology, how many people is paying for your services. Yes, there was always going to be a copycat, always, but your customer service has to be better, and your user experience and UI has to be better than your competition. Remember, Facebook was not the first. Was the fourth.
Was not.
I always say this. Please remember this. There's three eyes in the ecosystem. The innovators, who will come first. The imitators, who will copy the innovators and sometimes do it better. And the idiots, who will come later and will offer everything for free or for low margins. So if you're one of the two first, you have to be sure that you're giving the best experience for your clients or your customers or the people who are using your technology. It doesn't matter the technology is protected or not, because the most important part is that you keep your people happy.
Absolutely. Understood. Mr. Marcelo, it's almost, it was a pleasure, and it's almost been an hour. So I'll bring the discussion slowly to a close. Startups around the world are almost the same. Is there any specific advice that you would like to give to the startups and founders in Pakistan, investors as well?
Sure. When you create a team, your team has the knowledge. The founders of the company have to have the knowledge to run the company without hiring somebody else. And no investor will invest in a company who are paying a third party to build their technology, right? So that's number one. Second, you need to be very passionate about what you're doing because you're going to have a hell time.
Yeah.
A really entrepreneur. And we invest only in people that we see they care about what they're doing. I never invested in a company who is just trying to make money and will sell the company as soon as possible. Never.
Absolutely.
I don't care. I don't like that kind of people. So I couldn't invest in somebody who doesn't believe in what they're doing. And third, momentum and timing is one of the most important things that investors will look in your company. So you need to be able to show that you're growing at 20, 30% per year, per month, per week, whatever, and that you are in the best moment in order to raise capital. And fourth, if I can say, don't you ever go to an investor as an entrepreneur desperate for money. It's the worst timing to do it because you're telling the investor that they have the ace under the sleeve, So prepare yourself, prepare your investments for 18 months, 24 months, and start 6 months before raising the capital in order eh, to have cash in your bank account, so you are safe, that you will not be in a stress moment in order to raise capital, because those are the worst negotiations, because you know that in 2 weeks more you have no money to pay your salaries to the people who work with, right? So be good at that. Most of the entrepreneurs, most of the investors will never invest in companies like that. Good investors, because they know that it doesn't matter if it's $500,000, $5 million. The entrepreneur who was in that moment will do it again. It doesn't matter how much money they had in the bank account. They will spend most of the money in other stuff that doesn't matter. So those are my fourth comments for entrepreneurs. And for investors, do not try to keep the company for you in the first investment. That's not the way to do it. You need, please think that entrepreneurs are the most important part of your technology, of your company. If they leave, you're losing your money. If not, create your own company and hire somebody to do something similar. But do not invest in
Absolutely.
entrepreneurs if you don't believe in them.
Absolutely. Mr. Marcelo, it was an absolute pleasure. You gave more life and better words to everything that I had experienced in the past 10 years. But the way you explained it was just amazing. Thank you so much for giving us your time, and thank you so much for being around. And I think Umar has joined us back, so I think the live session is over. Free to talk.
It was really amazing session. I enjoyed a lot, and thank you so much, Marcelo, for coming again. It's your second time. I'm inviting
Yes,
you. It's always a pleasure, hosting you.
No, it
hopefully
was
one
amazing.
day
I really
I will be there. Hopefully. That something I love is to travel, to meet
Yeah,
new
yeah.
people, to meet new cultures. Hopefully, I will be able to go to your country and maybe invest in a company.
Exactly. Looking forward
absolutely.
for the
And
further
Marcelo,
collaboration.
I would also love to talk another time, and I would love to tell you more about what we're doing, and I would really love to, listen to what you have to say, because your experience is so vast and there's so much depth to it. I could feel it throughout the discussion, that I would love to take advice from you, and, maybe we can collaborate on something.
There's an entrepreneur pitching right there. I love it. I love it. That's exactly what you have to do. As soon as you have an opportunity, go and grab it. Don't be shy. I like it. Of course, Kira,
Yeah,
will be more than happy. See with the man. Shukran.
absolutely. Awesome. Thank you, Marcelo. Take care. Take
Thank
care.
you so
Bye
much.
bye.
Thank you so much. Bye.
Dr. Umar, thank you so much. Thank you.
Bye
Take
bye.
care.
Thank you.
Bye.